All right, y'all, back to work. Holiday weekend is behind us. Hope everyone had a restful day off yesterday. Now, we have some money to make this week, third week of February. And the way these charts look right now, I have a range on the faster time frames, a big move up on the hourly charts right now. The way these charts are setting up right now, it looks like bear traps are probably where the money is made tomorrow morning. Now, in my experience, we usually see three different variations, different types of bear traps in our trade room. So tonight's video, I want to cover my favorite bear traps, some variations of those bear traps. That way you guys have a roadmap, a game plan to make some money tomorrow as well. So charts look fantastic right now. As always, thank you so much for tuning in and supporting our channel. But enough of the intro though. Let's go find some more winning trades, make some more money here tomorrow morning. S&P SPYs already, as you can see it in front of me tonight. NASDAQ triple Qs are already. I have three very important clues on these charts tonight that are telling me where I think the winning trades are waiting for tomorrow. One of those three clues is right here on these hourly time frames. We are bullish overall right now on the S&P SPY, bullish overall right now on the NASDAQ triple Qs. I like to use these hourly charts as an overall directional filter. So one big clue is we're overall bullish. Another big clue though is the size, right? The size of that move, a very big move higher over the past couple of weeks here. So we're bullish, we're way high up right now. That's one of three really big clues that are tipping us off to where the winning trades are waiting for tomorrow. Now, we don't have any major news on our schedule for tomorrow. Let's jump right in now on some faster time frames and talk about the second and third clues, which are over here now on the tick charts. Tick charts make pattern recognition so much easier. If you're watching for the first time right now, this is a 7,000 tick chart. We don't trade off time charts in our trade room. And that yellow line right there, by the way, that is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades in our trade room. Now, there are two more important clues here on these tick charts. One important clue is this trading range right in front of us. Now, why is that an important clue? Well, because ranges, they act like magnets and they love to rotate. Down, up, down, up, down, up, back and forth we go. So knowing that, if we're bullish overall on the hourly chart, I'll bet there are going to be some great bear traps underneath the low of that trading range. That also leads me now to a third and final clue, and that is that previous range from last week. Now, why is that previous range an important clue? Because one of the most consistent things I know about trading is that anytime we have a range breakout, it is just a matter of time if we come back to that range for a breakout pullback. So you put these three clues together right now. We're bullish overall on the hourly. We're way high up on the hourly chart right now. This range right here wants to rotate back and forth like this, and that previous range down there is begging for a breakout pullback. Now, obviously, knowing that, my favorite trades for tomorrow are one of three different types of bear traps. We'll talk about this a bit later on in the video. But you'll notice right now what's happening right now. We're now rotating off the low of that trading range. We are bullish overall, so there is a very good chance this rotation continues as we break out of that trading range and go hunting for that all-time high. Now, I want to talk about this step first. A bit later on in the video, we'll talk about bear traps below that trading range. We'll cover that a bit later on the NASDAQ. I want to talk about, though, as we go higher, because if we don't have a good game plan, it's very easy to walk into trouble as we go higher. I don't want to buy high. For example, one of my favorite trades, if we go higher tomorrow, we're going to use this as a breakout pullback. Now, whenever I say breakout pullback, let's say overnight tonight, we continue going higher here. Remember, that prior range underneath me is going to want to breakout pullback and hold on that breakout pullback. One of my favorite ways to do that is to look for a two-legged pullback, then go looking for basically a bear trap. Trap the bears in, let them try once, let them try twice. Why twice? Because now I know where their stops are. As my first mentor always said, now I know where their pain is. If I can get a continuation overnight, I do not want to buy high. I want to start looking for a way to buy a breakout pullback. And to do that, looking for one leg, two leg, think about a measured move to find the area. I'm not going to pick a bottom on this. I'm going to trap those bears in, use one variation of a bear trap setup to buy into those stop losses. Now at this point, think of it this way. The size of that breakout leg is a measuring leg that will give us an idea now of where that target is going to be up overhead. If you want to make more money in your trading, add to your winners. Another easy way to use a bear trap is to look for this entry pattern. It's a higher high in price where that pullback in between, it will barely miss the moving average. We call this separation in our trade room. If I can get that higher high in price and that separation off that moving average, this is an easy way to add to my winning trade. So 1 out of 3 ways to use a bear trap if we go higher here tomorrow is to wait for that two-legged pullback, use that bear trap below the 21 EMA, squeeze those stops, add on to your winner. And again, the size of the breakout is the size of that target. That will give us an easy way to leave a little piece of that trade to run to maximize our winners. That's 1 of 3 breakout trades or bear trap breakouts I'm watching for if we go higher. Another variation of a bear trap. Let's say we keep grinding higher overnight. Whenever markets grind in breakouts like this, remember this, grinding markets are like a freight train. Grinding trends are a lot more aggressive. They're stronger trends. Because of that grinding momentum now, I can be a lot more aggressive on my entry. I'm going to draw a trend line off these highs. I'm going to bring that trend line down around that low. Now here's where the bear trap comes in handy. I'm going to look left. I'm going to find some of these prior swings, and I want to get the first touch off the low of that channel. Now, this could be a technical bear trap below a prior swing like I teach in our free video classes. It could also be that same 1 try, that 2 try, right? Let those bears try twice. Once they do, they're trapped. I can buy into their stops. And as always, want to make more money? Add to your winners. Look for that shallow pullback, that higher high in price. And again, I'll add to that winning position by getting in just below that prior swing. Now remember, in these pop and grind scenarios, the pop leg, that initial pop leg, that is your breakout leg, that is your measuring leg. Once we know how deep that pullback is here, now we project that higher, and that will tell us where to take our profit targets off on that bear trap. So a second bear trap. As we go higher, it pops up, it grinds, we connect off those highs, we find that channel, and we bear trap off the low of that channel, right below that 21 EMA, bear trap, and again, add to your winners as we make our way up to complete that measured move going higher. Now, I mentioned earlier, I have a number of bear traps I'm watching for my favorite trades below that range. We're going to cover that in just a moment. There's one more type of bear trap though I want to talk about. It's a bear trap in a new trading range. Now, ranges. If there's one thing you learn from me, I hope it is how ranges work. Now, let's slow down for a second though, because I want to talk about this range bear trap. Before we do that though, I know most folks watching right now, you know these patterns already. You're making money with these, but if you're watching for the first time right now, this might be a brand new language, a brand new strategy. Don't you worry though, I teach this entire system, this entire roadmap. In fact, I have a ton of examples of bear traps, add-ons, range rotations. Guys, I have so much more I want to share with you that I can't share all in these videos. What I'll do is I'll put a link up top here for you, upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is it's 110% free for you. Also, too, guys, keep in mind too, I'm going to put all the important links you'll need to learn more of this strategy. I'll put those links that you need in the description of the YouTube video. Definitely start first with the free video classes. Most folks start making money all on their own with only the free course I offer on the website. So start there first, start making money on your own. And also, if you're on Twitter or X, I post a ton of charts and videos and mindset stuff. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn the entire system and hopefully make a lot more money because of it is linked in the description there of that YouTube video. Okay, so where we leave off here, oh yes, we talked about 2 out of 3 bear traps as we go higher. One of my favorites, if we go higher here overnight into a brand new trading range. Range markets are so easy because, again, anytime we see multiple ranges, the most recent range is a magnet and the previous range acts like a breakout pullback. Now, ranges love to rotate back and forth. What happens is the amount below the range can be projected now above the range. The amount above the range can project now below the range. We use things like pendulum swings. We use things like triangles, right? Megaphones, expanding triangles. So if you understand that ranges love to rotate, well, at this point now, it's very easy to put this game plan together. My favorite trade in this situation is a move below the range. Again, think about using that previous range down for the breakout pullback. Now, remember me, I'm not going to pick a bottom on this. I'm not going to blindly buy down here. What I'll do is I'll look for that bear trap. I'm going to wait for price to pull back, let those bears get short a couple times, squeeze those stops. Now, this is where things get fun because now the amount we go below the range can now project now above the range. You see that now? Now, as we start that rotation higher, you've got your bear trap entry. That's your initial entry. Now we'll add more to our winner. Remember that higher high in price. That bear, that little shallow pullback there barely misses the 21 EMA, and we're adding in, right, for again, it's a bear trap and an add-on as it rotates back and forth. The one curveball you want to be aware of this for tomorrow is if we were to go sideways up here, just be very careful with a bull trap. In other words, sometimes what happens is sometimes we'll pop up, go into a range, we'll go higher first and then come back down again. Now, this can be tricky, right? Because what's going to happen is when it rotates off that high, it's going to feel very, very bearish, right? It will be very scary to want to buy that big pullback. But remember, this is a range market. It's not a reversal. It takes a lot more than that to call this a bear market on the hourly chart. So remember, if it gives the curveball tomorrow, if it goes up first, take the amount above that range, project that down below the range, that creates your area. And again, once you know how this works now we can keep looking for, again, that bear trap. 1 try, 2 try. I like two tries. I want to squeeze stops. I want the stops to be right there to squeeze those stops. And again, keep adding to your winner as you rotate back and forth. So those are 3 of my favorite bear trap variations if we do go higher here overnight on the way up to that all-time high. But now let's talk about my favorite trades for tomorrow. My favorite trades for tomorrow is I would love to rotate back down again. And again, I have 3 different types of bear traps, slight variations of these. We haven't talked about these yet here on this video. Let's go grab the NASDAQ right now and let's keep this party rolling with some more variations here of bear traps on the NASDAQ. Right away, you can see right away here, we're very bullish here overall on the hourly chart. Remember, the hourly chart is fantastic for giving us that overall directional bias. We know as it pulls back now, we're not a bear market. We're simply a pullback in a bull market. Now, before I dive into the tick charts, the faster charts here on the NASDAQ, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe, because YouTube rewards me every time you like, share, and subscribe to my videos. I know we're all busy people these days. I appreciate you guys spending a few minutes with me here every evening here on these videos. So thank you so much for the likes, subscribes, all the ongoing support. Now, let's roll those sleeves up. I promise I'm done begging for likes and subscribes. Let's now dive into our tick charts here, get our hands dirty here on some tick charts. There's one very big difference here on the tick chart here on the NASDAQ. You'll notice this is more of a bearish trading range. Now, this is where the higher time frame, that hourly chart, really is important, because if we rotate lower, remember, what do ranges love to do? They love to rotate down, up, down, up. We mark up the amount below, the amount above, the amount above, the amount below. So right away here now, right, if we go lower right now, it's going to feel very bearish. But again, we're not a bear market. We're an overall bull market. And again, because we know that range right there is a magnet, price will want to rotate back up into that trading range. I mentioned earlier, there are three types of bear traps down here. We'll cover that in just a few seconds here. Be aware too, as we go higher, same basic idea, right? We go up, two-legged pullback, breakout pullback, right? Bear traps on the breakout pullback. We go up, we grind higher here, right? We draw a trend line off the highs, bring down to that low, and again, look left, find some prior swings, bear traps off the low of that channel. And again, if you want to learn more about all these different entry techniques, make sure you grab that free course link. I linked up the description of the YouTube video. And the final one, that third bear trap overhead, was a breakout into a range. These are the easiest ones. Now that previous range is a breakout pullback. The most recent range is a magnet. Bear trap right below the low of that range. Trap those bears in, add to your winners, like I showed you earlier here on the S&P and the SPY chart. So the same game plan we saw on the S&P SPY going higher can be applied here on the NASDAQ as well. Okay, let's talk about now if we do get lucky and get that run going lower. Now, the typical bear trap we look for down here looks just like this, right? We'll run lower, the bears will try once, the bears will try twice, and we'll squeeze those stops running higher. So if we do run lower here, it's the same basic idea. It's a bear trap down here. This is a horrible place to want to sell. You would never want to sell down here. It will feel very bearish, but again, don't forget the time frame, that hourly chart we saw earlier. Trap those bears in once, trap them in twice, right? Use their stops to squeeze those stops going higher. Remember, if you're caught short, if you get stopped out of a short trade, you buy your way out of that short position. That is why those bear traps work so well. And as always, if we start seeing this thing separate away from the 21 EMA, shallow pullback, barely pulls back to 21, higher high in price, that is an easy way to add to your winner. And because we know now the amount below the range, the amount above the range, we now know where to leave your runner. One of the easiest ways to make more money in trading is not trading more often or different markets, is to get better at leaving a runner. And once you know how ranges work, it gets a whole lot easier with us in our trade room. Now, let's face it, right? I would love to get a bear trap down there, but sometimes I don't get that 2 tries from those sellers. Sometimes every once in a while we'll run lower and just whoop and run right back up again. If that happens, this almost always begins to grind going higher. Now, we mentioned earlier, whenever markets grind like this, it's very easy. Simply draw a trend line off the high, This is we call a V bottom reversal, right? We don't get that bear trap at that low. It bounces hard off of that low and it begins to grind. Whenever things begin to grind, we mark our trend line off the highs. We pin it there at that big low. We look left, and the goal is always this. I want that first test. The first test is always the best test to buy the low of that channel. And again, it could be a technical bear trap below that prior swing. You'll learn technical bear traps in that free video course. It could be a 2-try bear trap off the moving average, bears once, bears twice. That is oftentimes the most common trade we see in our trade room. We call those failure patterns in our free video classes. Failures into pullbacks, pullbacks into strength. Again, if that doesn't make any sense to you right now, take that free video course linked up in the description and you'll learn all the terminology I'm using here in the video. So a V bottom off of that low is, again, not my favorite bear trap, because again, I'd like to be buying nice and low here, but what I'll do is I'll take whatever the market gives me, grab that bear trap, that first test off the low of that channel. And actually 2 more variations right now. We oftentimes see a nice strong run down. We oftentimes see 1, 2, and get a really easy bear trap winner going higher. But sometimes, guys, the strength of that move going lower is just strong enough to give these bears enough to give this a breakout pullback off the underbelly of that range, and we wind up going back and retesting that low. Now, please remember, this retest is not enough to reverse that hourly chart we saw earlier. It's why it's so important to use that hourly chart as your overall directional filter. The way I look at this is anybody who sells on that breakout pullback, where's their profit target? It's back around these lows. Anybody who sells up here, they're buying their way out of that position at that low. These retest trades are a great place. In fact, one of my favorite variations of a bear trap is now, as this rolls lower, when I was a rookie, I would have thought that was a breakout. I would have thought that was a full-blown reversal, but it's not. Not when you know how high up we are on the hourly chart. So trap those bears in again. Let them try once. Let them try twice. These double bottom retest trades, if you're with us in our trade room, you know how much I always love these retest trades, because I swear these catch everybody off guard. Again, I'm not going to pick a bottom on this. We'll trap the bears in, squeeze those stops, and as always, add to those winners. Add to those winners as we what? As we rotate back up into that trading range. Market wants to rotate back up again, so leave that runner. Bear trap, add on, and let it run. Now, one more variation on this chart right now. I mentioned earlier, I would love to get below these lows here right now. What if we don't? What if all we get is a really shallow pullback right now? Remember, we're overall bullish right now, so shallow pullbacks are not as desirable, but there's one type of bear trap entry I can use that will make me feel a lot more confident buying relatively high. It's always going to be, you guessed it, a bear trap. Now in this one, I'm waiting for the 1-try and 2-try, but now because I'm not buying relatively low, I want to get in now underneath a prior swing. Underneath that prior swing. Look at that pattern once again. We're going to run lower. We're going to get underneath one of these prior swings here. That is usually where the money is waiting for us here in situations like this. I will let those bears try once. Let them try twice. Now I know their stops can get triggered above that high. But remember, in this scenario, I'm buying relatively high. I don't really want to be buying as it goes above that trading range. I'm going to use, and again, you'll learn this entry technique in our free video classes. I'm going to use a strong green candle closing above that moving average, take my 1-to-1 profit target, get rid of that risk once we get that 1-to-1, and leave that runner back, take out that high, up, take a big high overhead. We call these shallow pullback traps. Shallow pullback traps. It's a slight variation. If we go deeper, 1, 2, you see, a bigger breakout like this, I can risk small to earn much larger. But if I don't get that big breakout, now I've got to offset that risk reward ratio by buying underneath these prior swings. You'll learn a whole lot more about this technique in that free video class, but now you know my favorite bear traps as we go lower, my favorite bear traps as we go higher. Now you know how to avoid trouble tomorrow. Be ready to capitalize on whichever variation of these that we get. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. The easiest way to start making money in these markets to learn and trade along every morning at the opening bell. As always, I'll put all the important links you'll need to learn the system. Again, a ton of examples in that free video class. So start first on the free video course, start making money on your own, enjoy all the trade examples I include in that video series, then come out and join me in my trade room and we'll trade together every morning at the opening bell. In the meantime, guys, be well out there, be nice to each other. Hope you learned a bunch tonight and be here next time. Adios, amigos. Bye for now.